What's up, guys? So welcome back to my YouTube channel once again. So yeah, I'm here to break down price action for you. I just want to show you what is going to happen or what is likely to happen, like my bias on Euro USD for the upcoming trading week. Don't forget, the week has ended and June has ended. All right, so we're going to start the new trading week in a fresh month, the month of July. Okay, so we want to get the best setups and trades to make more money, okay, in July. Okay, so I'll be breaking down this price action for you on Euro USD just to tell you what I'll be expecting price to do the coming trading week on Euro USD. So if you are new here, please hit that subscribe button, turn on post notifications, and also leave a like and a comment in the comment section. Okay, without wasting much time, let's step onto the chart and let me show you what I am looking for on Euro USD for the upcoming trading week. All right, so I'm going to start on a fresh chart. Let's go to FXCM. I don't want to clean these things over there on forex.com. And I'm going to start from the daily time frame. So on the daily time frame, you can see that price is heavily bearish. Okay, we have a high that broke a low, bearish, high that broke a low, high that broke a low, and you can see where we are coming from. Point of interest, we are likely to go and take out this low. So we are heavily bearish on the daily time frame. So what I'm going to do is that I'm just going to take this high to this low. Okay, now one piece of advice: price action is like a loaf of bread. Okay, so you need to slice it into like chunks before you can do it. You can eat it. You can't swallow one whole loaf of bread, you're gonna die. So always try as much as possible to like reduce the amount of price action to the one that you can work with, like a sizable amount of pips that you can work with, and that is what I'm doing. So after that, I can step onto H4. On H4, what can we see? We have a beautiful high that created a low, beautiful high that created our last low over, I think it's the last low, this one over here. Okay, so nothing spoiled. You just have to mark this high, okay, and then that is the last low. Simple. Broke structure. So what do you look for? Your point of interest. You mark it right there, clean. Okay, nothing to stress. Now what it means is that if you look at this, we've broken structure, and so we can expect price to do that, and then if it wants to continue to the downside, we should continue like that. Okay, so that's the first thing. Point of interest marked, everything identified. So we need to step onto lower time frames and see what is happening here. So this time around I'll go to like H1. Okay, now H1, what do we see? Like a high, a low, a high, and then this is a low. The reason why I'm classifying this as a low, even though you can see that it took it out with a wick, but if you know what you're looking for, you are definitely going to mark this as a break or structure or inducement. In fact, whatever you want to mark it, but to me this is a clean break. Okay, some people call it inducement, which is fine. It is okay if you call it inducement, it is okay. The reason is because in as much as this is going to be like the last internal structural high, okay, which price needs to break before it gets into this point of interest, I am personally anticipating price to take out this high for real. Okay, I am anticipating price to take out this high like real quick, okay, and tap into this guy before anything. But I don't own price is not for my father, so we just have to react. Okay, so let's react. So once we have this high, we have this low, we need to work inside this trading range before anything else. Okay, until price breaks out of this trading range that we have marked, you don't have anywhere to go. Okay, so let's go there and define that point of interest over here. So we step onto M15, and then that is my guy. Okay, boom, like this. Okay, to the right side. Now again, I've said this over and over, if you think that price tap into this and it has mitigated, like I said, you are not serious in life. These are not true mitigations. Okay, the true mitigation is supposed to happen over here. All right, this is the break. The true mitigation is supposed to happen here, not before the break. No. So I'm done with that topic now. I'll not talk about it again. All right, so like I said, we need to push up, but then we need to start defining what is happening inside the internal structure within this leg. Okay, so first things first, we can see like a high that created an internal structural low, and then a high that created this one. So it means this is the last high that created this low, but because this guy is closer to this, and most likely it's going to be taken out, okay, because if you're watching here, we have like beautiful trendline liquidity, okay, even from here you have that beautiful trendline liquidity. It will take it out for real. Even this guy, I want it to be taken out, so how much more this guy? So definitely we're going to take out this guy, we're going to take out this guy. So because of that, I'm not going to mark this POI, you know, it is too close to the main one. So what we're going to do is that we are going to focus on the internal structure within this this leg. Okay, so first things first, what do we see? Let me show you guys something. I think there was a particular breakdown video where I was telling you guys to backtest something. Look at this. See this high? He created a low and then it broke. It means that price was supposed to tap into this guy and push to the top, but it failed and made him move to the downside. So what has happened? We have a high that created a low. Okay, after this break, then the next thing is we have a high that created a low. What happened? We took out this high. Where? There. Okay, you can see with a wick. Again, it will tell you it didn't make 50%, so this is not a true structural point. Please, it is not every day that price will make a deeper retracement, just like this one. Okay, we broke structure, we didn't make a deeper retracement, we just pulled down. It is valid, guys. It is supposed to be valid. You just have to understand how market is moving, that is all. So this is my low, this is my high, this is my low, and this is my new high. What happened? We took out this guy out here. Boom. Simple. All right, so after this break of structure, it tells you that my intraday is bearish, so my point of interest is sitting here. You see, so you realize that at the end of the day, the intraday is aligning with the daily, the H4, the H1. Everything is bearish. The only problem is that price hasn't gotten to the point of interest where I want it to start selling. So this is what I'm looking at now. In as much as the intraday is bearish, tapping to the point of interest is showing signs of like flowing to the downside. You can see this break after we tap into this guy, like likely going to flow like this to the downside. Okay, we also need to pay attention to what is happening in here. We have a beautiful low that created like a high, or this high, whichever one you want to take. Okay, I took this one because this is the first break that I saw, and then this is the low that created that high. Okay, so it means that this guy over here is a point of interest. What does it mean? It means that price can come in here, the bulls are going to hold, the bullish momentum is going to hold, and then we're going to push to the top like this. That's the first thing. Okay, so anytime you see me breaking this price action down, it is just to show you the last intraday swing leg or trading range to working. So in this case, this is the last high of the intraday, and this is the last low of the intraday after this break of structure in here. As simple as that. See, that is how simple you should keep it. Very, very simple. Don't stress yourself. Now what it means is that until price goes out of this high or this low, you are still inside this leg. Just trade. If you understand what the internal structure is doing, just trade it. If you don't understand it, wait for a break of the high to take the trade, or break of the low to take the trade. Simple. That is all. Don't stress. Okay, so personally, because of this, guys, you can see there is like a lot of equal lows over here, Asian low over here, and even like a trend line liquidity over here. And so personally, I'll be expecting price to, like, you know, drop down. Okay, and then one thing, if you guys remember, just now I showed you guys this particular first break of structure intraday switch here. You see, it left a point of interest here. All right, this guy wasn't mitigated. Okay, after this break, price never came to mitigate this. No, it didn't do. Not this one. No, you see that this tapping was before the break. This is not valid. This is not valid. Okay, after the break is when you should expect a mitigation. Okay, so in that case, I personally will be expecting price to come into this point of interest like this. So we have like this is going to act like a reactive demand zone. Okay, it's going to act like a reactive demand zone. So I am personally expecting price to like drop, clear this liquidity, tap into this reactive demand zone. Then we can now push all the way to the top like this, and then boom, into this bigger one, then we can now drop. That's what I'm looking for. Okay, but like I said, I don't control price, so I have different scenarios that I'll be looking at. Okay, and if price presents any of them to me, I'm gonna take it. So like I said, this is the last high, this is the last low. All right, so I don't care when I wake up Monday morning and I see this high ticking, I will still get an opportunity to get a counter trend tree to the downside. Okay, whether deeper or whatsoever, it will still give me a nice 1:5, which is super clean. All right, and again, we might also have a situation where price will not make any counter or whatsoever. It doesn't matter. There is a POY up there. Just wait for price to do it, to tap in. Okay, and then we can now start looking for shorts to the downside. And look, when we tap into this guy and we start, dropping, a whole lot of like confluences. Okay, all these liquidity areas are still there for price to sweep. Like it will just take it like out. Okay, but personally, I want to see price push to the top, and so the first thing I want to see is like come in here, clear all these guys, tap into this, react, and then pull up. Even this guy wanted to be taken out. Okay, I think I said it from the beginning, I want it to be taken out. Okay, because we have like a bigger POI up here. Sorry with this one, we have a bigger POI up here, like a point of interest up here. So I just want this guy to be taken out. Boom, and then we can come in here before you see what price will do next. All right, but then just because of reaction, and so that you don't rise above your ego. Okay, I'm the one calling price action, blah blah blah. It's a foolish feeling. You don't have to do that. As a trader, you need to react. So currently, as simple as ABC, focus on this high and then this low. Ideally, we are bearish on the intraday, which means that we should expect the flow to the downside. But then, looking at this, we have this last point over here. Irrespective of the fact that we have liquidity over here, price may not necessarily take the liquidity out immediately. Sometimes it will just respect it, move into the bigger one, come for the liquidity before maybe we continue to the top, or even continue to the downside to continue the bearish flow from the daily H4, H1, and then M15. All right, so that's the first scenario. Respect here, pull up, and then tap into POI before you move down, or right from here we can see the bearish flow has already started. We can just continue to the downside like I'm looking for, clear all this liquidity, tap into this zone, react, pull up into this point of interest, and drop. Sometimes even when we tap into this point of interest, we don't necessarily need to pull up higher. No, we can just do something like this and we continue. Okay, the reason why I'm saying this is if you take a Fibonacci from this high to this low, you realize that even though we didn't tap into point of interest, price is coming from like a 50%, or even this is a 61.8 level. This one over here, 61.8 level. This is a 78.2 level. So it's super clean to drop. All right, so you may not even have price like pulling up that high. Maybe clear all these guys, react a little because the reactive zone, and then we continue to the downside to continue the bearish flow. All right, or tap in there, react, tap in here, pull down a little, continue the move to the top into the higher POI. Super simple. Okay, so that is my view on EURUSD. Okay, and just like I said from the introduction, EURUSD is just the flip side of DXY. So if you know what is going to happen on EURUSD, automatically you know what the DXY is saying, and you know what is going to happen to the dollar pairs. Super simple, right? So I hope you found value in this video. If you did, leave a like on the video, and I will also appreciate a comment in the comment section. Have a pipful week, have a blessed week filled with profits and happiness. Okay, stay safe. Bye bye.